We've got this wide range bar that closes in the middle. He's absolutely right. It's not that nothing's going on. It's that people that get long at bad highs are getting flushed out. People that are getting short on the bad lows are getting flushed out. And where do we end up? Right back in the middle with no positions. Right? But that ain't going to go on forever. All right, so now look at this wide range bar. Before I told you we had this wide range bar and encompass 3 bars. This wide range bar covers the last 11. So it's a whole hour's worth of trading. We haven't gone anywhere. People have gotten excited and got long, got blown out, got excited, got short, blown out, and we're right back in the middle of the range for a whole hour. Believe me, there's nobody happy here other than the market makers. And we don't want to pay them. No offense to any of the market makers out there. Here we go. Now, I'm going to skip ahead a few bars just to save you some pain in the you-know-what. We get this nice downtrend. Look at it. It's beautiful. Finally, the darn thing moves. We get lower highs, lower lows. It's absolutely gorgeous. Isn't that what you're looking for? Okay, here we go. Next bar. Lower. Higher. Jeez. Wide range bar shoots out of the hole. Everybody that was in this and jumped in and finally found their way in one bar, it took out every single high. Every single high. They're all washed out. Excuse me? Yeah, I've got different pivots, absolutely, yes. So, in a certain sense, that one bar wiped out all that work. For all those people that got short, they finally found a way in. They finally thought they saw the light. They saw the light, all right. All right, let's see what we happen. And what do you think happens from here? Higher or lower? Lower? Higher? Yeah, give me lower. Higher? That's 50-50. Okay. Anybody say the day's over? No. Okay. We consolidate. We go into an energy coil. Price is tired from making this run down and now this wide range higher. Now everybody's going, the people that got short said, you know, geez, I better take a walk around the block or I better go get a drink or whatever. The market makers are counting their money. The market's resting. Now, if you've been looking at a screen for an hour and a half and you haven't entered a trade or you made a trade and you're out, it's a great time to go get something to drink. And I don't mean a vodka. Go get some, you know, a green tea or some water or something. Take a walk outside for 5 minutes. There's a couple guys here in mentoring. So one thing I tell them, if you're in the screen for an hour, hour and a half, and you haven't made a trade, get up and stretch your legs, get away for a little bit, clear your eyes. Because otherwise your eyes start to glaze over, you start to hunch over, and you're only working at half speed. So, you know, try and always be full and ready to go when things are going on. So if the market's congesting, it's telling you it's restoring its energy, time for you to restore your energy. If you don't feel well, don't trade today. There's always a market tomorrow. If you need a break, take your 5 or 10 minute break. Be good to yourself because you'll trade better, okay? All right, so the market's restored, we're restored. Let's see what we get. Higher or lower out of here? Higher? Lower? 50-50, okay. Makes sense? We go higher. Price continues to make higher highs. Now take a look at them. We break out with a wide range high, closes basically on its high in its upper third. Then we make a higher high but close on its low. We make another higher high, closes on its high. What do we have? Alternating closes, which tells us should be a little bit worried about this rally. Ready? Higher or lower? Higher first. Lower? Lower wins hands down. Ready? Well, here we go. Up, down, up again. Where are we going? I mean, you guys just answer what you think. The problem is I built this on Friday, so I really actually am going side by side going, what the heck did I build? Let's pull back. If you wanted to know what it looked like, this is the whole day that we've seen now so far. Now you can see that sell-off. Now this is that rally up, and these are these last 3 highs that have alternating closes. So if you want to pull back and see the big picture, this is what it looks like, okay? Does that help anybody? Now I'm going to ask you again. Higher or lower? Higher? Lower? 50-50, okay. What's the most probable path of price? Long term. Higher? Lower? How about this? Are we going to significant new highs or significant new lows? Significant new highs? Significant new lows, staying in the range. Okay, so we've got a couple people looking for new lows, a lot more people looking for new highs, and about an equal amount of number saying going to stay in the range. Anybody disagree with that? Okay. This is what I notice. We've got this topping pattern over here. And we had, I think this is a rounding top. If you take a look at the closes, we kept bouncing up here, and even though we made a series of new highs, we can never close up there. We don't see any signs of strength up here at all. Every time we get up here, the sellers show up out of the woodwork. Now we turn down and we sell off hard. Now the market's working its way back up, but we're starting to get alternating closes again, just like we did here. Now, will it take out this prior high? I'm going to ask you, can you see where price is headed? New highs, new lows. New highs, new lows. Equal. Okay. Anybody ever do this? Do you draw them on your chart and say, you know, new high would look like this, new low would look like this? What do I think? Anybody do that? I'm it. Okay. You might want to try it. When I'm in a quandary, I draw it in and go, no, I don't think that looks right. Or, yeah, that could happen. Or, what would make that happen? Think ahead. You get paid to think ahead. You get paid a lot to think for ahead. Believe me. It's kind of, it's like a chess game. The more moves you can actually accurately think ahead, the better off you're going to be. Now, do you want to sell? If you think price is going to this line, let's forget about what it's going to do yet. Let's think about tactics. If you think price is actually going to make it to this test of the prior highs, do you want to sell as price approaches these prior highs? Or if you're in the camp that you think it's going to make new highs, instead, do you want it to break above and then trying to find an area to buy? So who wants to sell at the line as it gets there? Who wants to wait for it to break through and then buy a pullback? Who doesn't want to trade the Canadian dollar? Okay. So here's the thing. Let's take a closer look. Some traders got short here, the market makers especially. Most of them got their money out when they did this snapback here. But some of them are still short. The people that are still short have got stop-loss buy orders up here. If it takes out these highs, they just give me my money, I'm out of here, whatever's left, right? There's going to be people, especially the larger traders, that say, hey, this looks like a good area for me to get short if I'm going to try and get short. I'll put limit sell orders right here or right before here. If these limit sell orders are big enough, the stop-loss buyers aren't going to get hit. If these limit sell orders get hit, not only the orders from these traders going to get hit, but the new positions are going to have stop-loss orders up here, and they're going to get hit, and this thing is going to take off like a rocket. Now, if there are enough limit sell orders, what's going to happen? Anybody got a guess? It'll hit there, stop, and turn back around, right? All right, so let's take a look. Now, here's how I think about my own trades, and I have this on my computer. Guys in mentoring have heard me say this before. Confident, cocky, lazy, and dead. This is the progression of being in good shape. If you want this, I'll email it to you. This is from a book by the name of Tad Williams. He's a science fiction writer. It's a great book, but has nothing to do with trading, but it's a great analogy. When you're in the peak of what you're doing, planning and thoughtfulness are completely in control. You're not thinking about, I've got to trade, I must trade, if I don't trade, I'll die. Instead, you're thinking about, what do I want to do? What am I looking for? How do I want to do it? And you've got it all planned out, and you wait for the opportune moment. And when you're on the top of your game, that's where you want to be. Now, when you get come on in, darling. When you get a little bit of success under your belt, sometimes you move over into a cocky period, and that's okay. This is fine. And this is kind of an area where you're still planning and having some good thoughtfulness, but also you're saying, when's the next trade coming here? Because I just had 3 or 4 good trades. I'd like some more. And most people actually that are good traders don't operate over here on the left. They tend to operate over here. They're looking for more trades. They're a little more aggressive. If they have some success, they tend to cut a few corners, but not enough that they do a lot of damage to their trading. So either one of these is okay. The farther you are to the left, the higher your success rate is going to be, but your number of trades are going to go down as well because you're going to be more choosy about which trades you're going to take. When you start to bleed over in this area called lazy, planning and thoughtfulness is getting less and less interesting to you, and you're interested in, I've only made 4 trades today. I'd really like to make 6 or 7. Anybody ever find themselves in that position? Come on, be honest. Come on, just give me a couple more. It's only 2 o'clock. Come on, give me a couple more trades, right? Okay, you're in a slump, and you know where you're going if you're not careful? What's this word? Dead. What this is, there is no planning and thoughtfulness. This is only, it's going down, let me get short. It's going up, wait, let me get long. And these are the people that the market makers just chase in and out of the market all day long until their accounts go to, the NFA says, and I've done these statistics with them on sealed accounts, the average retail trader that opens an account with $10,000 in 6 months closes their account with nothing in it.